You're watching Russell Investments Market Week in Review for the week ending March 25th, 2016. I'm Mark Soupiset. We're coming to you this morning from Russell Investments World Headquarters here in Seattle, Washington. I'm joined again this week by Erik Ristuben, our Chief Investment Strategist. Good morning.
Happy Good Friday.
Well, thank you to you, sir. And let's talk about what we saw this morning, where we had a fourth quarter 2015 GDP revision. Still saw some slowing in the economy, but not as slow as we originally had thought. Talk about that.
Well, yeah, the revised numbers a lot. In fact, there's a lot of stories yesterday about the fact that the revision data in the last few years have been a little more volatile than it had been in the past. Yeah. It's interesting because they are revising, but not in one direction. So sometimes they have to revise up, sometimes they revise down. 1.4. What we knew was fourth quarter was a soft patch. Yeah. We did talk a lot about inventory destocking. We're still seeing in that number. The bright spot in the economy in the fourth quarter for the U.S. was the consumer. Yeah. And that was, again, ratified by the numbers that we saw today. It was a slow spot. Sure. First quarter is probably going to be a little lower than we'd like it to be as well. But we, again, think we're on a pace for this year to grow between 2 and 2.5%. So
it was interesting. Last week we had Janet Yellen making noise that we thought, inflation might be not a serious concern, maybe, flat. This week the Fed president is making some noise that they might be concerned about increasing inflation. What do you see there? Yeah, that was actually last week. One of the more surprising elements, and we talked about it, of the Fed statement was that any inflation they're seeing, that the inflation may be transitory. In fact, the chairman was kind of poo-pooing the inflation thing. Which I think took a few people by surprise. And a radical juxtaposition to this week, which is six Fed presidents have come out and talked about inflation. Most of them have said April as the rate hike is still on the table. Okay. So I think there is some obvious concern and at the Fed about inflation. Right. Their number one job is to provide price stability, which is control inflation. So it clearly is it's on their radar. All right, and I want to ask you now about Asia, but before I do that, I want to let our audience know we have a new feature. It's our audience poll question, and you can vote on our Twitter handle at @RussellInvest. So go there now, and our Twitter question this week, what do you think about inflation? Will we see more or the same inflation in 2016 than we've seen over the past 7 years? So give us your vote. So Erik, let's get back and talk about Japan. This week we saw they had a decent week in the markets, and a lot of that being driven not only by oil, but also by the fact that the U.S. dollar was strengthening. Talk about that. Well, yeah, the talk about inflation, people began to believe, well, maybe the Federal Reserve is going to raise rates a little bit more aggressively than they thought last week. You saw kind of the weakness that you saw after that dovish comment last week. You saw the dollar weaken. Yeah. This week it made it all back. So you had the dollar strengthen, and I think that actually gave the Japan equity market, the Nikkei, some breathing room, right? Because one of the downward pressures on the Nikkei recently has been the fact that the yen has appreciated relative to the dollar. The dollar, now showing some strength, take a little pressure off the yen. I think that allowed the domestic Japanese equity market to kind of rally a little bit in relief rally. Again, we are not expecting the dollar to continue that strength cycle, so that pressure may not be coming completely out of the market. Interesting enough to note, though, is oil sold off about 4%. Okay. It's $1.60, so we got to start putting things in context. It's $1.60 a barrel, but it was about 4%. And the interesting thing is, along with the stronger dollar, EM, the Russell Emerging Markets Index, actually outperformed the Russell 1000 and the Stock 600 this week. So the usually strong dollar, low oil price is bad for emerging. This week, a little bit less bad news evidently for stocks. Very interesting. I want to wrap up in Europe, where certainly we have to mention the tragic events in Brussels this week, which I think cast a pall, of course, over the markets, but also just in general, kind of a flat, blasé week there. Did have a decent PMI number, though. What are you seeing out of Europe? Yeah, I mean, what we're seeing is that we saw strengthening in the flash PMIs for both manufacturing and services in the broader Eurozone. I think we continue to see information coming out of Europe that tells us their economy is on solid footing. It's growing at a reasonable rate. Obviously, you have that level of domestic kind of upset within Brussels, and that obviously these countries are very close to each other. That affects the whole region. It affects us. It affects everybody in the world. So yeah, I think you probably shouldn't be surprised that the Stock 600 is down almost 2%. Sure. But in terms of economic terms, Europe is doing okay. Okay, Erik, thanks for that recap. We appreciate it, and we appreciate you joining us again this week on Russell Investments Market Week in Review. We'll see you next week.